Hey everyone, and welcome to another deep dive with Stock Analytics AI. This time, we're teeing off into the world of FST Corp, the company behind those KBS golf shafts. You know, the ones trusted by tons of pros on the PGA Tour. But get this, while they're making waves in the golf world, their financials are giving off some seriously mixed signals.
Yeah, it's really interesting.
So are we looking at a hole-in-one or a total swing and a miss?
Well, let's tee up and take a closer look to find out.
I'm game if you are.
All right, so first things first, what's really interesting here is that FST Corp, they're not just selling these high-performance golf club shafts directly, right? They're also a key manufacturing partner for some of the biggest names in golf.
So they're playing both sides of the fairway.
Exactly. Like imagine a chef who creates incredible dishes and also supplies top restaurants with their secret ingredients.
Okay, I'm getting the picture. So that's FST Corp. They're like the secret weapon behind some of those big golf brands.
That's a great way to put it. And, they recently went public through a SPAC merger. Oh, yeah, that's right. They're listed on the NASDAQ now as KBSX.
Yep. And that was a move that aimed at fueling growth.
Yep.
But here's the thing. Their market cap, it's been on a real roller coaster ride, dropping significantly from those initial highs after the merger.
Okay, so red flag number one.
Pretty much. And
Yeah.
it's a big question mark that we'll definitely need to unpack as we go deeper.
All right, so we've got this unique business model, a really strong brand, a recent public listing, but some shaky market performance. What about the people at the helm? Can they actually steer FST Corp towards success?
That's always a key question, and FST Corp's leadership is interesting.
I'm all ears.
First up, we have the CEO, David Zhuang. He's the driving force behind the whole KBS brand. He took FST Corp from a small Taiwanese manufacturer to a global player.
Wow, that's impressive.
It is. He clearly knows the golf equipment game inside and out.
So he's got the vision, but a company's more than just one person, right? Who else is on the leadership team?
Well, we have Warren Huang as the COO, and he's bringing over 20 years of experience in golf shaft manufacturing and sales.
Okay, so he's got the operational expertise.
Exactly. And on the financial side, we have Marie Chow as CFO, and she successfully guided the company through their previous listing on the Taipei Exchange.
So they've got experience in brand building operations finance. That sounds like a pretty solid lineup, right?
It does on paper, but...
But what?
Well, they're relatively new to these positions, most likely because of the recent SPAC merger.
Oh, so it's a bit too early to tell how they'll perform long term.
Exactly. But their individual track records do suggest they have the skills and experience to lead FST Corp to success. Potentially, at least.
Potentially is the key word there. Okay, so we've got a unique business, a strong brand, and a seemingly capable but new leadership team. Let's get to the part that really makes or breaks an investment, those financials.
Time to look under the hood.
Exactly. And from what I've seen, FST Corp's scorecard, it's a bit, well, puzzling.
Puzzling is a good word for it. Let's break it down one by one, starting with their market cap. As you mentioned, it's taken a significant dip since those post-merger highs.
Ouch.
It's currently hovering somewhere between $10 and $16 million.
That's a pretty steep drop.
It is, and it suggests that investors aren't quite convinced about FST Corp's future prospects just yet.
Okay, yikes. But maybe their revenue is strong enough to kind of balance that out.
Well, the revenue is currently sitting at $33.94 million.
Okay, not too shabby.
Not bad on the surface, but it's actually down from the previous year.
Oh, so revenue is shrinking.
It is, but they did see some positive quarterly growth recently, so there might be a glimmer of hope there.
All right, so it's a mixed bag when it comes to revenue, but what about the bottom line? Are they actually making any money?
And here's where things get even more interesting. Their PE ratio, it's negative.
Negative.
Negative, which means they're not currently turning a profit.
Oh, that's not what investors want to hear.
It's not a good sign. A negative PE ratio essentially means the company's losing money for each share outstanding.
Okay, so not profitable, no clear signs of a revenue turnaround. Are there any bright spots? Maybe they have strong cash flow to keep things running smoothly in the meantime.
Unfortunately, no. Their free cash flow is also negative.
So they're not generating enough cash from operations to cover their expenses and investments.
Exactly. It's another area where they need to show some serious improvement if they want to attract value investors.
All right, so let's do a quick recap here. FST Corp, they have a lot of potential. Don't get me wrong, they've got the brand, the unique business model, but they're not profitable. They're not generating enough cash. The market seems a bit spooked. Are we missing anything crucial before we wrap up this first part of our deep dive?
Well, there's still a lot more to uncover. We need to see how the market is viewing FST Corp right now, who actually owns the company. the risks and opportunities they face.
So much more to dig into. Sounds like we've got our work cut out for us. All right, everyone. We're going to take a quick break, and we'll be back soon with more on FST Corp, so don't go anywhere. And we're back with the second half of our deep dive into FST Corp, the golf shaft innovators who are really hoping to score big with investors.
That's right. We've seen their unique business model and strong brand, but those financials are definitely raising some eyebrows, to say the least.
Definitely some red flags popping up. So let's shift gears a bit and talk about what the market is saying about FST Corp. Are investors cheering them on, or are they running for the hills?
It's a good question because market sentiment can really make or break a company.
Yeah, is Wall Street buzzing about them? Are there any, insider whispers we should know about?
Well, not exactly gossip, but more like a collective mood or sentiment, and unfortunately, the whispers aren't exactly painting a rosy picture.
Okay, lay it on me. What are the whispers saying?
Well, recent news has highlighted a pretty dramatic drop in their share price. Just last month alone, it plummeted by 28%.
28% in a month, that's rough.
And it gets worse. Since the beginning of the year, it's down a whopping 53%.
Whoa, okay. If I were an investor, I'd definitely be hitting the panic button right about now. What do you think is causing this loss of confidence?
Well, it seems investors are reacting to a combination of factors. First, those less than stellar financials we discussed earlier are definitely spooking some people.
Yeah, nobody wants to invest in a company that's bleeding money, especially if there's no clear path to profitability on a horizon.
Exactly. And then there's the whole SPAC situation.
Oh, right. They went public via a SPAC merger.
Yeah, and SPACs, they have a bit of a mixed track record. Some investors view them with a healthy dose of skepticism, especially after that recent SPAC boom and, well, bust.
So the SPAC connection might be adding to the uncertainty surrounding FST Corp.
It's definitely a possibility.
Okay, so we've got cautious investors in the whole SPAC situation. What about the technical analysts, those folks who study all the charts and graphs? Are they seeing any positive signals?
Unfortunately, no. Even the technical indicators are pointing towards caution. Many of them are flashing sell signals.
So even the charts are saying steer clear.
For now, it seems that way.
Okay, so it's not looking so good on the market sentiment front. Let's shift gears again and talk about ownership. Who are the key players holding the reins at FST Corp? What does their ownership structure look like?
That's an important question, and it can tell us a lot about a company's stability and potential direction.
I'm all ears.
So when it comes to FST Corp, the first thing that jumps out is that institutional ownership is surprisingly low.
Low? How low are we talking?
Well, it sits somewhere between 5% and 8%, depending on the source.
That's really low, especially for a company listed on the NASDAQ.
It is.
You'd think those big institutional investors would be all over a potentially high-growth company like this. What do you think is holding them back?
It probably boils down to risk versus reward. Institutional investors, they tend to be pretty risk-averse, and they're likely waiting for more concrete signs of a turnaround before they jump in.
Makes sense. They want to see some proof that FST Corp can actually walk the walk before they commit serious capital.
Exactly.
Okay, so institutional ownership is low. What about insider ownership? Are the people running the company putting their own money where their mouths are?
That's a great question and one that can be very telling. High insider ownership can signal that management has a vested interest in the company's success.
So do FST Corp's executives have a lot of skin in the game?
That's where the data gets a bit murky. Some sources report insider ownership as low as 1.73%, which isn't exactly a vote of confidence. However, other sources show a much higher figure, around 47.90%.
Okay, so it's not entirely clear. Is there anything that can give us a clearer picture?
We do know that CEO David Chuang directly owns a sizable portion, about 12.24%.
So at least the CEO has some belief in the company. It's still a bit unclear, though.
It is, and it's definitely something worth keeping an eye on as we move forward.
All right, so we've got cautious investors, unclear insider ownership, and some shaky market sentiment. Let's step back and look at the big picture. I'm ready for the SWOT analysis.
SWOT analysis, let's do it.
This will give us a more comprehensive view of where FST Corp stands in the market.
Absolutely. Strengths, weaknesses, opportunities, and threats. Will cover it all.
So let's start with the positives. What are FST Corp's biggest strengths? What are the clubs in their bag, so to speak?
Their biggest asset is undoubtedly that powerhouse KBS brand. It carries a lot of weight in the golf industry.
Yeah, especially among serious golfers and pros. I've heard great things about KBS shafts.
It has a reputation for quality, performance, and innovation, which allows them to command premium pricing.
And we can't forget about their decades of experience in manufacturing golf shafts,
Definitely. They've been in the game for over 30 years, and that kind of longevity suggests they've really honed their manufacturing process.
which likely translates to cost advantages and efficiency.
Yeah.
And they're also committed to innovation, which is crucial in any industry, but especially in golf equipment, where technology is constantly evolving.
Absolutely. They're always pushing the boundaries with new materials and designs.
Okay, so strong brand, manufacturing expertise, commitment to innovation. Anything else in the strengths column?
Their dual business model is also a big plus. By selling both directly to consumers and through OEM partnerships, they've diversified their revenue streams.
That's smart, especially in an industry that can be fickle.
And let's not forget, they now have access to public capital markets thanks to that SPAC merger.
Right, which could be a huge advantage for future growth, assuming they use those funds wisely.
Absolutely.
Okay, so FST Corp has a lot going for it, but every company has its weaknesses. What are some of the hazards they need to watch out for?
Well, as we've already touched upon, their lack of profitability is a major concern.
Yeah, no matter how great your brand is or how innovative your products are, if you're not making money, it's going to be tough to attract investors.
Exactly. And then there's the negative revenue growth, which adds another layer of concern. It's not just that they're not profitable. Their revenue is actually shrinking.
Yeah, not a good sign.
And to top it off, they have a significant amount of debt.
Oh boy, so they're spending more than they're making and they're relying heavily on borrowing to keep things afloat.
Pretty much. And that high debt load puts even more pressure on them to generate revenue. It limits their flexibility and their ability to invest in growth and innovation.
And we can't forget about those working capital inefficiencies we talked about.
Right, that high days inventory figure suggests they're having trouble moving their products quickly, which ties up cash and can further impact profitability.
So profitability, revenue growth, debt, working capital, those are all pretty serious issues that FST Corp needs to address.
They are.
But what about opportunities? Are there any bright spots or open fairways ahead for them?
Actually, yes. The global golf equipment market is growing, driven by factors like increasing participation in the sport and a growing demand for high-performance gear.
So the pie's getting bigger, which means FST Corp has a chance to grab a larger slice.
Exactly. And they seem well-positioned to capitalize on this growth trend. With their strong brand, their commitment to innovation, and their existing relationships with both consumers and OEM clients.
That's good news.
It is.
They could also explore expanding the KBS brand into related lifestyle products.
That's a great idea. Think KBS branded apparel, accessories, training aids. The possibilities are endless.
And that would allow them to diversify their revenue streams and tap into new markets.
Exactly.
Okay, so we've got a growing market and potential brand expansion. Those are some pretty exciting opportunities. But of course, no business is without its threats. What are the bunkers lurking out there that could derail FST Corp's progress?
The biggest threat they face is likely competition. The golf equipment market is incredibly competitive, with well-established giants like Callaway, TaylorMade, Titleist, all vying for market share.
So FST Corp is up against some heavy hitters. What can they do to stand out and compete effectively?
They need to continue to leverage their strengths, especially that strong KBS brand and their commitment to innovation.
And find ways to differentiate themselves and create a loyal customer base.
Absolutely. They also need to be vigilant about protecting their intellectual property.
Especially with a premium brand like KBS, which is susceptible to counterfeiting.
Exactly. Counterfeit products can damage a brand's reputation and hurt sales.
And then there are the macroeconomic factors to consider.
Right. Economic downturns can impact consumer spending, especially on discretionary items like golf equipment.
So FST Corp needs to be prepared to weather those economic storms.
And finally, there's the regulatory environment. Golf equipment is subject to strict rules and standards, so they need to make sure they're staying compliant.
So a lot of potential pitfalls to avoid.
There are.
Okay, we've covered a lot of ground here. From FST Corp's internal strengths and weaknesses to the external opportunities and threats they face. What's the big takeaway for our listeners?
Well, it's clear that FST Corp is a company with a lot of potential, but also some very real challenges.
So are they a good investment or not?
That's a question each investor needs to answer for themselves based on their risk tolerance and investment goals.
So should our listeners take a swing at FST Corp or steer clear? We'll be back in a minute with our final thoughts and some bonus insights, so don't go anywhere. And we're back for the final round of our deep dive into FST Corp. We spent the last two parts analyzing those KBS golf shaft makers, exploring their potential, and dissecting those financials that have some investors a little on edge.
Right, and now it's time for the million-dollar question, the moment of truth. If you were a value investor, would you take a swing at FST Corp right now?
Okay, drum roll, please. What's the verdict? Are we talking hole-in-one or hazard ahead?
Well, it's not a simple yes or no. FST Corp is a bit of an enigma. They have huge potential in a growing market. The KBS brand is a serious asset, and they're clearly not afraid to innovate, but those financials, they're a real sticking point.
So they're like a golfer with a killer drive but a shaky putting game.
Perfect analogy. They have the power to go far, but they need to seriously work on their short game. Those crucial elements like profitability, cash flow, and managing debt. For a value investor, the current picture is not exactly screaming buy just yet. They really need to show they can turn that potential into consistent, tangible results.
So what's the bottom line for our listeners? Should they just write off FST Corp for now?
Not necessarily.
Yeah.
This is definitely a company worth keeping an eye on. They're in a growing market with great brand recognition, and they're pushing the envelope with innovation. If they can address those financial concerns and show some consistent progress, they could become a real investment darling.
So it's a wait-and-see situation. Don't count them out just yet, but proceed with caution.
Exactly.
And now for that bonus insight we promised you earlier. We love hearing from you, our listeners, and getting your perspectives on these companies.
We do. Head over to the comments section of our Stock Analytics AI YouTube channel and let us know your thoughts. Do you agree with our assessment? Would you invest in FST Corp? What aspects of their business stand out to you? We're always up for a good discussion.
And if you enjoyed this deep dive and want more in-depth analysis of companies and industries, hit that subscribe button on our YouTube channel. We'll be back soon with more thought-provoking content.
And just a quick reminder, all the information we shared today is based on publicly available sources and our own analysis. We always encourage you to do your own research before making any investment decisions.
This deep dive was brought to you by Stock Analytics AI, your go-to source for market insights powered by AI. Thanks for joining us.